Good morning, everybody. It's Jeff Fitzpatrick. It is Monday, the 6th of January, 2025, and time for my weekly video log. So what I'm covering this week. Firstly, I want to look at the market, the overall market, and secondly, the stock picks that I've got together for this week, and thirdly, an overview of what's happening around the clubs. So first, the market. And here we have the S&P 500. This was at the close of business on Friday of last week. And you'll see that we've got basically a downtrend looking as though it's coming along with a strong up candle on Friday. I'm told that that was as a result of the US government finally electing a new speaker. So we'll see where that goes from now. However, at the bottom of the sheet there, you can see all of these red bars. They're firstly red, so that means that they are selling bars rather than buying bars. The majority of people were selling stocks. And secondly, they're a bit lower than normal, and that's because of the holiday season, so we've got low volume. So we've been in a bit of an artificial period over the last week or two while we get through Christmas. Today, everyone's back to work with a vengeance, and we'll see where things go from there. So at the beginning of the week, I'm really concentrating on rolling stock forward because I'm expecting the prices and the S&P and the general price to rise a little over the next couple of days. If that's the case, I will look to spend my time concentrating on selling calls and rolling forward put trades that need to be rolled forward. Then, if we get the fall in the trend, as looks as if it may happen on the beginning after that, I'll be sitting back on my hands and waiting for that to bottom out before I open new trades. Across the clubs, we've got plenty of buying power, and we just now need opportunities. So that's where we're at with the overall market. So this week's picks, and I want to just talk first of all about the process that I've been through to get to them. And if I share my screen rather than use these little pictures, you'll get a better idea. So here we go. So let's first of all just look at the headings. The list, so I've got short term where I'm looking for really short term trades. I've got them coming from Zacks, which is a big research company. And they produce a lot of lists. Two in particular I'm looking at for the short term are Zacks Upgrades. It comes from the bonus section of their particular website. And these are stocks that the analysts have been upgrading either from 2 to 1 or 3 to 2 over the last week or two. So these are the stocks that collectively some 4,500 analysts and 150 brokerages feel as if they could be on the rise. The next list, FA and TA, actually stands for Fundamental Analysis and Technical Analysis, and 12. That's the number I've limited the list to, the 12. And it's exactly what it says on the tin. So these are stocks that Zacks consider to have good fundamental analysis prospects and good technical analysis prospects. When we go to the medium term, I've got the TICN value line based 4x4 list and the 3x4. So 4x4 is scoring 40 or more for quality and value, and 3x4 is scoring at least 30 for quality and at least 40 for value. We then come to VL 1, 2 and B+. So that's value line, stock scoring 1 for timeliness and 1 or 2 for safety and having a financial strength of at least B+. Existing refers to a list that I keep of existing stocks that we're in. BI value, that goes to Better Investing, which is the US equivalent of the Investment Club Network, and they produce several lists, and these are what I've got from them. Their value list, their small business list, and there is one that's blank. I'll explain that in a moment. That's their quality and dividend list, and then they've got their quality list and a specialist one they produce, their Stockmaster list. So when I produce the list from Better Investing, it's very, very easy. It's a click of the mouse to actually look at them further. And therefore, I analyze them, and I've only put in here the stocks that have made it. So on their quality and dividend list, no stock made it through that first analysis. Continuing that, I've got another Zacks list, and that is the Zacks value list. Then I go to the long term, and I've got stocks from the Value Line portfolio. So Value Line runs several portfolios, and this is their number one portfolio, and these two stocks were new to it. There may well have been more than two new to it, but the ones that have made the next stage of the filtering process are these. And then I've got the Zacks main list in there too. So what happens with these is, in each case, all of the Zacks lists I will then put through the Better Investing system. All of the Better Investing system I'll put through the Zacks system, and so on. And the stocks that are listed where they're not highlighted, they're in there, but they're not acceptable. They haven't made it through the filters. The green highlights have. The sort of flesh-colored highlights, they haven't made it really. I think that's through Zacks, but they didn't make it through there. And the sort of mauve-colored ones, they didn't make it through Better Investing. So at the end of all that, I end up with just these green stocks. I then go to the next stage, which is my picks. And here they are. And I look at each of them then in terms of the available put premiums. I should say the very first filter on all of the ones we've just looked at is the charts. I don't put them anywhere near my picks if I'm not happy with the charts. But those were the charts on Friday, and they'll definitely need another look again today or tomorrow to make sure that I'm still happy with them. So I find several of these, what I might call decent stocks, that don't have decent or even any premiums available. Those I will consider as possible buy stocks. Strongest amongst them at the moment, I would say, is actually Dell. Dell is being highly recommended. The others that do have premiums against them, I've got the current price in there. I've got the expiration date of the put that I'm most interested in, the strike price, the premium, the percentage that gives, the premium per day based on the number of days that the trade would run, the stock buying power usage per contract, the return on investment, and the annualized return on investment, and then the headroom. That's how far below the current price the strike price is. So they're reasonably healthy, but of course, the further below the current price we place the strike price, then the less premium we get. And some of the premiums are pretty low. However, we are dealing in significant sizes of trade, a lot of contracts. So, these do multiply up. And also, in some cases, we're dealing with a very short period of time, which also makes them decent trades. And I've actually got them ranked here according to the annual rate of return on investment. And so, understandably, the trade that's got the shortest period to run has actually come out with the highest annualized return on investment. And the stock that's got the lowest premium and the longest time to run, that comes down at the bottom there. So that's where we get to it. So I won't be jumping into these on Monday directly. I will be keeping an eye on them over the course of the week, and I may well update them again. I really made a bit of a mistake. I did my research a bit too early, basically because it was holiday time and I was dragging my feet about, but that's another story. So in summary, firstly, I use the charts and indicators. Then I check everything against the Better Investing system. And then I look for Zacks ratings of 1, 2, or 3. I look at the value line comments. I look at the put premium availability, the stock buying power used, calculate from that the annualized return on investment. I prefer trades that have got expiration dates at the end or the beginning of the month, and I also look for a good clearance on the strike price below the current price. And if everything gets to all of that, then I'm generally good to go with it, but keep an eye on the charts. So Club Progress, because of the stocks going down in December when it was thought that the US government couldn't sort its budget out and they're going to have to close down, I had to take avoiding action by rolling forward put trades. So that the effect of that was to take money out of the net liquid value profit and put it into the long term, the left in value profit. But when I do that, it actually puts more into the left in value profit than it takes out of the net liquid value profit. So here, if you look at the end of this, the date actually needs updating. It's not the 17th and the 12th. That was actually the end of the month. So that was the 31st of the 12th. We have 3.5 million invested. An average of 2.5 million basically. We've got a huge amount of stock buying power still. The second highest amount we've had since getting going, $2.6 million, 81% of our buying power. We've got a very high option drag. As I just mentioned, we've been moving trades into the option drag and out of net liquid value profit. And a big change around from the end of November to the end of December, minus 73 to plus 40, called 49. Equity in cash, well over 3 million now. And compared to the previous month, you can see the story I've just been telling you there. And the left-in value, again, slightly down, but that's really because of the equities going down rather than the effects on the left-in value of rolling things forward. But nonetheless, and we won't get a straight line. We've managed a pretty straight line so far. We're bound to get the odd little bump, which we've had there. But I'm perfectly happy with where we're at and look forward to trading this as soon as we can get going in the new year. And that's where we're at. So wish you all good trading and Happy New Year if I haven't spoken to you, and I'll talk to you again soon. Cheers.